Charting on different time frames. Price charts are analyzed by technical traders in an attempt to predict price movement. A trader's choice of technical indicators and the time frame they consider are the two primary variables for technical analysis. Numerous technical analysis time frames are displayed on charts ranging from 1 minute to monthly or even yearly. Technical analysts most commonly examine the following time frames: 5-minute chart, 15-minute chart, hourly chart, 4-hour chart, daily chart. A trader's personal trading style typically determines what time they study, trading intraday, or opening and closing positions within the same trading day. Typically involves analyzing price movements on charts with shorter time frames, such as 5-minute charts or 15-minute charts. Market positions held overnight or for extended periods of time are most often analyzed using charts that show the market on an hourly, 4-hour, daily, or even weekly basis by long-term traders. Price movements within a 15-minute time span can be very significant for intraday traders who are looking for a profit opportunity from price fluctuations occurring during a trading day. However, that same price movement viewed on a daily or weekly chart may not be particularly significant or indicative for long-term trading purposes.